Ladies and gentlemen, boys and girls, welcome.
Hey,
Way. We've got
wow.
stuff everywhere. 100th
Wow.
episode, Doc.
Wow. Yeah, and they said it wouldn't last, mate. But and it has, and yeah, happy hundredth. The first hundredth they say is always the hardest, but we're really working towards the first 1,000. So lots to go.
I was going to say, Doc, it's been about 2.5 years now. It was
Yeah,
around
yeah,
July
yeah,
2022, and I decided to collaborate and start this
yeah,
journey. And I'm
yeah.
going to take this bloody hat off. It's cutting off circulation to my.
Oh, that's a shame. It looks really good.
It's all right. We'll leave it there. We'll see how long. Let's see how we go. There we go.
Yeah, I've got
So
party hat envy.
it's more the gunpowder or something that's smelling in the room. We get this out of the way. But Doc,
Oh, okay.
it's around July
Yeah,
2022,
yeah,
midst of the COVID
yeah,
pandemic freak
yeah,
out. Interest rates started to move.
yeah, yeah,
I
yeah,
mean, there was a lot happening when we decided to start with this free
yeah,
information
yeah,
to help people.
yeah.
Let's um
Uh,
let's go back. What were we talking about in July 2022, Doc?
Well, it is interesting to look back, Graham. You know the journey we've sort of been on because it does reflect just the ups and downs of the market and particularly sentiment. Because if we do look back to July 2022, we just had our first interest rate increase in 10 years, and then we got another one, and another one, and another one. And you get my drift. And they
Mm.
just kept on rising. And of course, that was grist to the mill for the doomsayers because we had so many predictions that house prices would crash 10, 20, 30% in a year. Pick your number. Same old suspects saying the same old things, same old clickbait. We've heard it all
Mm.
before. We've addressed this over and over again. You mentioned lockdown. We had it all through lockdown, the same sort of predictions. We had them way back in 2019 and 18. We
Mhm.
had the same 20, 30, 40% falls. Who'll ever forget bricks and slaughter? You know what those
Well,
predictions were.
40% falls and we grew how much the other way?
Well, we went up 10%, mate. So
So
it did. It never.
50% wrong in the wrong direction.
Yeah, you'd think they'd learn, but they don't. And we can understand the media likes a scary story because we'll read it, particularly if it's in
True.
regard to our houses and our units, because we're very attached to our housing market in Australia, and maybe that's why we have probably the most resilient and robust housing market in the Western world. I think I can still use that but still, in terms of advanced economies, we just keeping on. And we've done it again this year. We bounced back last year after we fell around about shock horror 4% in 2022, not 10, 20, 30%
Sorry, did you
fall.
say four? Did you say 40, Doc?
Four. It
Four,
comes
four,
after
not
three.
40. Just
No,
4%, single
just
digits.
yeah, just 4%. But why would it be? And that was the capital city weighted average. Why would we be surprised? Because look, when we look back in history, we've only had 4 years where the national capital city house price has actually fallen. 4 years
Mm.
since 1987. What were you doing in 1987, Graham?
I was 3. 4.
Okay,
I was
four.
4.
Yeah. Well, I won't tell you how old I was. You won't believe me, but it is 4 since 1987, which is pushing on 40 years ago. And the worst one we ever had was during that silly bricks and slaughter scare campaign of
And it was what?
2018. 5,
5.5%?
5.5%, Graham. That's the worst we've had out of the 4 since 1987 house price crashes. But this is what the
Mm.
podcast's all about. It's about information, not misinformation, not
Mhm.
disinformation.
Mhm.
We get it right because we're not here to scare people. We're not here to get cheap headlines. We're here to inform people. Information. We reflect knowledge, our knowledge base in terms of the housing market, and that's why we get it right. We don't just use one set of figures. We don't look back 6 months or 12 months to see what house prices have been doing. We have a lot of collaborative evidence, and then we talk to all that evidence. And we've had another good year this year, Graeme. Certainly the market bounced back last year after that 4% fall. We had an 8% rise, so down 4, up 8,
Mm.
and we look like we're going to be close to another 8% rise this year, Graeme. And gee whiz, talking about balloons and party
Hang
poppers and
on.
all that sort of stuff,
How much? How much, Doc?
8%. So we're going to be up 16 over the last 2
8.
years.
There's an interesting thing about Doc 8 because it's 8 on its side,
Yeah, wow,
but also,
spooky.
last week, Doc, our little old podcast, 8,866 plays
I
for
love
the
that.
week.
Love that, mate.
Huh?
That's a big number. That's a really big number.
That's
Uh,
that many downloads in just last week's podcast.
Well, that's fantastic, and we've got a great show today, Graham. Got some special giveaways today,
Ooh.
particularly for those that are looking to invest in property. And this is a precursor to some new information resources we're going to be providing through My Housing Market and Infinity. That's just cherry ripe. Can I use that saying? Just cherry ripe for investors looking for where the hotspots are in the nation. Certainly, knowledge is a good thing, particularly if you're in the business of investing in property. But another good year, halfway through the spring selling season, Graham. We've got some very interesting information in regard to how the spring selling season has been going. I noticed a few little, hints of doom and gloom coming through as we've seen clearance rates just easing a little bit recently. But it's not all just about clearance rates. It's about the number of properties that are being sold. And without giving too much away, we've seen spectacular numbers of properties being sold under the hammer, Graham.
Well,
So plenty of confidence out there. And talking about the last 2 years, mate, and party poppers and balloons, gee whiz, if you owned a property in, there we go again, don't don't breathe in too much of the
I
gunpowder,
don't know,
mate.
I don't know where that went.
you'll, you'll, you'll,
I
you,
don't
you
know.
might start speaking funny, but hey, would you want to be a homeowner in Perth, Adelaide, and Brisbane over the last 3 years,
Well,
last two
excuse
years?
excuse me. I want to talk about that before we get into it.
Nurse,
You bring up the
nurse,
slides.
nurse,
Yeah, yeah,
nurse.
um, I want to talk about it because when we started, I'd actually just recently moved from Sydney. You and I used to
Yeah,
see each other day
yeah,
around the
yeah,
Sydney
yeah,
office and see you
yeah,
jogging
yeah,
around the harbour,
yeah,
and and it was interesting because I just moved to Queensland at that time and sort of got stuck
yeah,
with borders and ended up buying up here. And then
yeah,
I went pretty hard into Queensland because having relocated to Queensland from
yeah,
Sydney, I really got across that market. And you and I spent a fair bit of time talking about the disparities in
yeah,
2022
yeah,
for, you could buy a home for 400-500 grand
yeah, yeah, yeah,
and it would
yeah,
rent for $600-700 a
yeah,
week.
yes,
And that disparity, again, which had us right compared to the idiots and the
yeah,
armchair experts of, well, the rent's not going to disappear overnight. The
no
values
way,
had to catch up. It was too
yeah,
undervalued. Now,
yeah,
it's
yeah,
interesting because those homes, Doc, for 400 and 500 grand that I personally and a lot of
yeah,
clients went and bought, they're now worth 850, 900 today, which is
yes,
just obscene.
yeah, and
Now,
uh,
you've
you
talked a
know,
lot, Doc. We've seen Perth, Adelaide,
yeah,
we've seen Brisbane continue, Gold Coast continue to track that way. Do you think that that's a good metric for people every now and then to go and staying away from regional for a second? If you're 30,
yeah,
40 minutes of a CBD,
yeah,
and like Brisbane, Gold Coast,
yeah,
Adelaide, Canberra,
yeah,
if you can
yeah,
find something that's renting to that level within
yeah,
a CBD, that's quite rare near a
yeah.
CBD.
Yeah, but it's a signal, Graham. You use it as a signal to
Mm,
identify, and we look at yields, and yields are about looking at the return that your rental gives you over a year based on the current asking price. And they are, as you said, a very good forward indicator of potential capital growth. Not
mm.
only higher yields are giving you, hey, a higher return on your investment, good stuff, but they're also signaling perhaps not perhaps, but signaling that there is more potential capital growth in those areas with the higher yields. And that's what we saw in southeast Queensland, because
Mm,
we are now in a permanent position, basically a permanent position of a significant rental crisis. I don't like using the
mm,
word crisis, but for many out there looking for rental properties, it is a crisis. It's not as bad as it was a
yeah.
couple of months ago, but that doesn't mean it's not bad. Which means that you're not really, as a landlord, concerned about finding a tenant. You're more concerned about getting a quality tenant. In other words,
Mm.
you can really have the upper hand in terms of selecting, your tenant. And even though obviously rents can't keep rising at the staggering rate that they have over the last couple of years, there's still, because incomes aren't rising at the same rate, there's still upward pressure on rents in our rental market. And that's the point. You look at that, and what's what we're going to do today, Graeme? We're going to look at an overview of that sort of scientific approach you should take as an investor, which will be, as I said, a bit of a precursor to an app we're going to be bringing out very soon, just working on it now, to identify through yields where are the potential hotspots or value opportunities in the marketplace. And
Well, let's do that, Doc. And while you
yes,
bring up your slides, I just wanted to firstly thank all the loyal listeners who
yes,
have actually been listening along for the last 2.5 or so years to these 100 episodes. So thank you from Doc and I and the Infinity team. And we
yeah,
hope you enjoy today's birthday session and the freebies that Doc will provide. And we look forward
yeah,
to helping you make intellectual, informed, educated financial
yeah.
decisions for another 100 episodes, Doc.
Yeah, and at least, and we are providing the toolkit, right, for making those decisions. That's what we're here about. We're here to
Mm.
inform, to educate. Even though our markets, as I said, are remarkably robust and resilient, you need to take a scientific approach to your investment decisions, and that's what we're
Yeah.
going to do here by offering, as you said, more giveaways, some really great giveaways in terms of we already have a great little app that shows you asking prices and asking rents. We're going to convert that into an investor app, which will show you where the yields are on throughout Australia. So you can look through, use that app to identify, firstly on the local government area basis, and then on a suburb basis, where so that assists you in making those scientific decisions. But enough talking from me, Graeme, or we will be here
Yeah,
for the 101st episode going forward. So
let's let's get this show on the road, Doc.
yeah. So my housing market and Infinity are pleased to bring you our 100th episode. We're always trying to give you more information. It's all about the current state and future prospects of your housing market. And current state's important because we just want to keep the freshest data possible coming through as it comes through every week. That's why we look at our auction markets, particularly on a weekend by weekend basis, because as we've proven, they're a very good forward indicator of what's happening generally in our housing market. So it is the week ending Wednesday, October 16th, right dead centre in the middle of the month. And we are right dead centre in the middle of the spring selling season. We're going to see how that's been going so far in terms of the auction market today. So look out for that graphic. So today we're going to look at the September regional house prices, and that'll sort of validate what we've been saying about the growth since 2022, Graeme, because we'll look at the growth over just the past year in each of the major regional local government areas. We're also, as a new one today, we're going to look at the top capital city unit investment regions. So we're going to look at the top local government areas in each of the major capital cities and see where the top yields are there, and just have a bit of a chat about that one. And as usual, the latest weekend auction results. So to start with, the top regional markets. So let's start with New South Wales. These are the largest regions. So I filtered this in terms of size, local government areas, and this is the growth over the past year. The median prices over the 3 months to September, and it's comparing it with the 3 months to September last year. So the top performer has been Albury, which has bounced around a little bit, but charging back now. Albury up by 17.7%. And that's because it's a value market, Graham. And people are realising
Yeah.
when they look at comparable regional prices that Albury still offers the best value, and that's pushing up prices. But what I think is particularly interesting here is when we look at the top performers, we have the Tweed and Ballina really chugging along over 10% there over the past year, which is ahead of what Sydney's growing. Sydney's around about 6% over the past year. But that, of course, the Ballina and Tweed markets are picking up the energy from the Gold Coast, that red hot Gold Coast
But Doc,
market.
there's another popper to pop here because yeah, the
Wollongong.
gong, Wollongong,
Go
10.8.
Wollongong. Yeah, over $1 million median now. Wollongong doing very nicely, 10.8%. But hey, let's be clear, Wollongong probably is really a suburb of Sydney now. It's just a half an hour drive out of St George, right, Sutherland, and there you are at in Wollongong, and you've got the seaside, and you've got the nice lifestyle there in Wollongong. I guess you could sort of call Wollongong the southern beaches versus the northern beaches in a way,
Mm,
but maybe that's drawing a line too far. But yeah, up by 10.8%. Newcastle, there's a bit of a gap there. Newcastle up 7.8%. Keep on keeping on. Then we get some of the lower value areas. Dubbo up 6.1. Coffs Harbour 5.8. These are still very positive results, Graham. And the only underperformer there is Wagga with 2.4% fall. But Wagga has grown recently, and I think that's more of an adjustment to recent strong growth. But it just does reflect that Sydney market, which has been a top performer again this year. Sydney market is starting to top out. It's not because there's lack of demand, as we'll see soon. It's just because prices are starting to push ahead of buyer capacity. So you just can't keep
mm,
going to the bank and saying, hey, give us another 100 grand, because they're going to say, are you earning more money? Well, no. And we're not going to give you a lower interest rate. So, hey, that's what acts to top out prices growth. It's not a lack of demand. It's just affordability barriers rising through strong prices growth, what we've had in Sydney over the last couple of years. Now, the contrast is obviously Victoria. We know, again, it's reflecting what's happening in the capital city markets, Graham. This is what we say.
mm.
Usually our regional markets pick up what's happening in the capital city. And there's a classic example. Top performer, Shepparton in Melbourne, up by 9.3%. Bendigo, 8.3%. And then Macedon Range is just up by 1.1%. But it is those value markets that are attracting buyers in
Mm.
Victoria. When we get closer into Melbourne, it's not such a good story there. Ballarat down by 2.8%, so tracking Melbourne to some degree. Geelong, which of course is adjacent to Melbourne, down by 3.5%. But it's those prestige markets, Graham, that have been holding the Melbourne market back over the last couple of
Yeah.
years. There's really a lack of confidence there. This should be the strong point for the spring selling season for Melbourne's inner east, inner south, and inner city markets. This is when they usually are at their best during the year, but we've still seen no takeoff in those markets. And this is an example of what's happening in prestige property in Melbourne with the Mornington Peninsula and the Surf Coast with medians around $1 million there, struggling to find growth over the past year. And this is generally what's kept that Melbourne market back. Although value or budget to mid-price regions in Melbourne are doing okay, Graham. And as we keep saying, we think that Melbourne market's a market of opportunity. And without trying to get too far ahead of ourselves, I think now we can start talking perhaps that the next move in interest rates will be down. Now, it's not going to be for some time, folks. We're talking 6 months realistically. But if the next move is down, that might be just the spark that Melbourne market needs,
Mm.
particularly higher price regions, just to get going again and to regain a bit of confidence. So you heard it first here.
Personally, I've been personally pretty active in Melbourne, Doc, being given that it is really at the bottom.
Yeah,
At some point, it does have to recover, and I like to go there before it's cool, not when
oh,
everyone in the media goes, "Oh, Melbourne's booming." I think
yeah,
it's important to take that scientific approach that if something's
yeah,
almost below replacement value in Melbourne,
yes.
then you're getting a good buy, and the yields are strong.
Yeah, and we're going to look at that today, Graham, which will reinforce exactly what you're saying. We're going to look at those
Mm,
Melbourne LGA yields, where the top yields are, and I think you'll be interested to see just the results of that of what we're doing today with that investor giveaway.
mm.
So Queensland, hey mate, Queensland, check it out. These are the top performing local government areas in Queensland outside Brisbane. Rockhampton, 29% over the past
Wow.
year. Townsville up and running again after years of subdued activity. 28. These are big numbers over a year, Graham. Mackay, 23.4. Noosa up 23%. Bundaberg, 17%. And even the underperformer there, the Fraser Coast, still up by 8.8% over the year.
Mm,
And the Gold Coast, which has been roaring along, as you mentioned, for a couple of years, still up by 11% over the past year. These are great numbers if you're a
mm.
homeowner in Queensland, these areas, Graham. And you mentioned Brisbane before and how those yields were pointing to capital growth. Brisbane now has an overall median price above $1 million. And Graham, it's above Melbourne, which sort of tells you something, doesn't it? If good old Brizzy is heading above Melbourne, how long's that going to hold for? Well, we'll see, but it's been a
Yeah.
remarkably strong period.
You got these markets like Toowoomba and
Yeah,
Canstock are
yeah,
really just
yeah.
powered along as well over the Gold Coast and the Sunshine Coast.
Yeah, which have had their strength period. So this is about,
Mm,
in a way, those markets continuing on as the markets that were not underperformers, but lagged that growth, that very strong growth, are now starting to get that growth overall. And when you look at prices growth in the big three markets at the moment, which are Brisbane, Adelaide, and Perth, as we speak, over the past 2 years since we've been doing the podcast. Do you know, Graham, that unit prices in Brisbane, Perth, and Adelaide have increased by 40% in the last 2 years?
well,
Mate,
I'm smiling, Doc,
40.
because it's great news for owners or investors and homeowners, but it's great news if you happen to have bought a couple as well.
40, mate. 40% in 2 years. Hell, spells. Tremendous stuff. Tassie hasn't performed quite as well. So we're getting some early signs that Tassie might be starting to pick up. It's a bit of a contrarian market, that
Mm,
Tasmanian market,
it
Graham.
is.
It goes up when everybody's going down, and it goes down when everybody else going up. So some signs there. Hobart up 4.1% over the past year, and Clarence up 1.8%. Launceston up 0.9%. Glenorchy, the underperformer there by 9.8%. And Palmerston, the big regional performer in Darwin, up by 3%. And Darwin just moving sideways, down by 1.9%. So, drum roll. This is our new model. We're going to have a very close look at this, Graham. This is a new slide that I've put up. So, what we're looking here, Graham, is the top 5 local government areas in each of the major capital cities. Now, the top 5 is on yield. So, these are the top yielding local government areas in each of the capital cities. We've also got the indicative vacancy rate also. So, this is this scientific approach I'm sort of talking about, right? So we look at the yields, we can determine that. So this is the asking prices, which is important to understand because it's here and now. So we know what the prices are being asked here and now in these areas. We're not looking at a 6 months or a 3 month or a 12-month sale price model. These are asking price models. So this is what's happening on the ground as we speak. And of course, these are current asking rents as well. So that gives us the yield. So this is the return over 12 months of the asking rent. Divided into the current asking price. So Cumberland there is the top performer, a Sydney performer, a yield of 6.17%. Higher vacancy rates in these regions, Graham, 2.15%, which is higher than the Sydney vacancy rate, which I've got over there at 1.7%. I've got the capital results there. But the yields in Sydney are lower there at 4.9% for units. So Parramatta next, and that's of course a very big regional market. Now, I want to explain that what we're going to do. So we can look here at the vacancy rate, which is important if you're an investor, a landlord. You want to know how you can access how accessible tenants are by the vacancy rate. but we're also going to put in the number of properties in our app, the number of properties for rent. So it's not just about the vacancy rate, it's how many properties are for rent as well, because that shows you the competition, and also the number of properties that are currently for sale. So you can create a model based on the yield, the number of properties for sale, the vacancy rate, and the number of properties for rent. And then you can start working through it. Now, this is for regions. So you can say, okay, these regions are the better performing regions. And then you can start looking for the suburbs within those regions, which are the top performers. You understand? So we'll be able to take that approach to identify suburbs that have the best yield, have the best prospects in terms of the number of properties for sale. You want fewer, obviously, and the number of properties for rent, you want fewer as well. And we might just really start talking scientific by creating an actual model, Graeme, where
Mm.
it will identify that. So look out for that. So that's New South Wales.
Well, you can see some trends there, Doc. I'll pick on Queensland for a moment.
Yeah, yeah,
That
yeah.
the higher the yield, the higher the vacancy rate. The lower the
Yes.
yield, the lower the vacancy rate. So you can start, and then if I go to New South Wales, high yield, high vacancy. The only abnormality in the middle there is Strathfield, but typically
Yeah.
as the yield diminishes, the vacancy rate diminishes. So it's very interesting, Doc, that you could build a really solid model around this.
Yeah, that's right. And with Strathfield, Graham, because I haven't put the data in this one because we haven't got enough time, but it's just an example of where we're heading with our model,
Mm,
which will
yeah,
assist
I like
our
it.
viewers and listeners. But Strathfield has lower numbers of properties both for sale and for rent, right?
Mm,
But its vacancy rate is still higher, but there's not the same choices. So if you've got a low vacancy rate with high numbers of properties, that can mean that it's absorbing all the the rental properties are being absorbed at a quicker rate. That's what we've got there with Liverpool, with the lowest vacancy rate, but Liverpool and Parramatta have the highest number of properties for rent. So now we spoke about Melbourne, right? Look at Melbourne here. This is really interesting. So these are the top performing Melbourne inner city or regions, Melbourne regions. So the first one is the city of Melbourne. Now, the city of Melbourne has the highest vacancy rate. It also has the highest yield, but
mm,
the city of Melbourne has thousands of properties for rent, and that's the big
mm.
difference here. There's way more choices, so that's a sort of a negative for that yield. But when we look at Yarra, Whittlesea, Yarra, of course, is inner city Melbourne.
Look at that. Huge
Richmond,
yield and no vacancy rate.
and
It's
no
phenomenal.
vacancy rates. Hello, this is what you were
Mm,
saying. This is hello, opportunity knock, 1.6% vacancy rate. Whittlesea, which of course is out to the north of Melbourne, similar scenario. Moonee Valley, which is the inner north of Melbourne.
mhm.
These are big yields, Graham. Anything over six
Yeah,
percent, particularly
it's
when you look at
crazy.
the overall Melbourne yield, it's well ahead of what the overall Melbourne
Yeah.
yield is. So, and let me mention, this is for units, Graham. This is for
Yep.
units. All right. So we're looking at the unit market. Our model will you'll be able to filter for houses and townhouses. South Australia, similar scenario there. The most properties for rent units, and it's not a big rental market in Adelaide for units, is Adelaide. Again, it shows you that the more properties there are for rent, the higher the vacancy rate, and the lower the yield. But again, some good yields there in Adelaide. And you mentioned Queensland as well. Western Australia has the highest yields. But again, it's the areas with the highest number of units, which is Perth, has the lowest vacancy rate and the highest yield, the highest vacancy rate, marginally highest vacancy rate, and the lowest yield. So this gives you a sense of what we're going to put together in this type of a model, which will give you an insight into, firstly, our capital city markets, so you can identify the markets which have the best prospects. And it also helps you track, if you have an existing investment in these markets, just
Mm,
exactly what's happening there in terms of returns, which can help you determine how you should be modeling your rentals on your properties here. So lots of information coming through on that, but we're starting to go long on time, so we'll move to our final, which is
Well,
our
it's
usual.
our party. We can do whatever we like, Doc.
Yeah, that's right. Well, you're right. Who cares? So the latest weekend auction results, we do this every weekend, Graham. It has proven over and over for years and years to be a really reliable forward indicator, insight into what's happening generally in housing markets. It was interesting last week, Graham. We moved through the previous weekend, which was the New South Wales public holiday. NRL Grand Final, there was a shortage. Well, there was a low number of auctions, of course, over that weekend, but they came flying back last weekend. In fact, Graham, we had a remarkable surge in auctions across the board last weekend,
Mm,
but clearance rates actually held up. Now, we're going to put that all together in a different sort of model at the end, but let's have a look at the results. 1,052 auctions in Sydney. That's a
wow.
really big weekend. 67.4% clearance rate. Sydney's just been tracking a little lower over the last couple of weekends, just below 70%. But with very big numbers of auctions. And that's part of the story of why we're getting there's more choices for buyers and more competition for sellers as spring moves on. But still a good result there, 67.4%. Melbourne, 1,066 auctions. Clearance rate down a little bit in Melbourne. Again, it's those higher priced areas that are holding that Melbourne clearance rate back. Brisbane had a massive weekend of auctions, 160 auctions.
Very,
Clearance rate
very
down.
unlike Brisbane.
Massive weekend, Graham.
Yeah, it's not really typically an auction market, Brisbane.
At those numbers, that's near the record number of auctions on any weekend in Brisbane, 160. Clearance rates, not surprisingly, down a little bit, trying to absorb that big number.
Yeah.
Adelaide also high numbers of auctions, but didn't really miss a beat. Clearance rates similar to the weekend before. And Canberra also a big weekend of auctions in Canberra.
Wow.
Not a bad result there for Canberra, given 100 auctions. So we've been waiting for
Yeah.
that Canberra market to sort of pick up. And maybe, again, it's teasing us, maybe not. We'll see over the next few weekends. But I think what we need to look at clearly, Graham, here is what happened last year over the same weekend. Look at the difference in auction numbers last
Mm.
weekend compared to the same weekend last year. And even though clearance rates were a little higher, there's just been a massive increase in the number of properties going
But
under
Doc,
the
that
hammer.
we're still sitting over 60s in Sydney and
Yeah,
Melbourne with huge numbers, two,
yeah,
300 more, 400
yeah,
more.
yeah, yeah.
That shows you that supply and demand is pretty evenly matched in the 60s, Doc.
Well, we're going to show you something in a minute, Graham, which will show you that this reflects still a strong market. It's not just about the relative
Mm.
position of clearance rates; it's about where they are compared to the number of properties going under the hammer. So, sales numbers is an important statistic here. We're going to run through that in just a sec. So, this is the trend. Sydney down a little bit so far over the month with one holiday and one big weekend over October, tracking below that 70%. Let's keep an eye on Sydney over the next couple of weekends, but certainly big numbers of auctions and large numbers of sales. Melbourne down a little bit also, but again, that reflects the school holiday period to some degree in Melbourne, but certainly down slightly on where it's been the last few months. Brisbane has picked up compared to September. Had a funny month, Brisbane, over September, with clearance rates the lowest for some time, but picking up again now. And we'll again watch that over the next couple of weekends. Adelaide still Australia's strongest weekend auction market, and Canberra, maybe going to start pushing up to 60% again, as it did look like going through the middle of the year and reviving a track back over September. But again, starting to pick up. We'll keep an eye on that. So I mentioned auction sales, Graham. So let's have a look at the number of properties that have sold under the hammer over spring so far. So we're talking about the last 6 weekends compared to the same 6 weekends last year. And we saw those higher clearance rates, but the difference is there are so many more properties being sold now. In Sydney, we've actually sold 14.9% more properties over spring so far this year than we have the year before, same period. Melbourne also up 14.5%, the number of properties being sold compared to the same period last year. Look at Brisbane and Adelaide, and they're the boom markets at the moment, along with Perth, which doesn't have an auction culture at all. Brisbane auction sales up 35.4%, Graham, compared to the same period last year. Adelaide up 32%. That's why prices are growing, mate, because there's so much competition for property. So it's not always about the clearance rate, right? You got to look
True.
also at the sales. So sales are really happening. And this isn't a sort of a get out of jail sales environment. Sellers are quite happy to test the market. They're getting their prices. We know that from the latest prices data. And it's only Canberra, which has been, as we know, the underperformer, where the number of sales is actually down 5.9% over spring so far compared to the same period last year. But Brisbane and Adelaide, that's a massive increase in the number of properties selling under the hammer. And even Melbourne and Sydney, big rises in property sales. So that auction market, I tell you, who'll be happy, Graeme? Estate agents and the state government will be, they'll be thinking, yeah, you beauty, all that commission and all that stamp duty from those extra
Mm.
sales and prices still rising in Sydney, Brisbane, and Adelaide. So I thought I'd put that one in just to revalidate what's happening with our auction markets, continuing to report a solid housing market model. So if you want those auction clearance rates, every Saturday night around 6:30 p.m. on my LinkedIn channel, Doc Andrew Wilson at LinkedIn. And we have the full national report, which is published around about 9 o'clock on a Sunday, sometimes a bit later. And that includes the regional breakdowns and the top 10 sales out of under the hammer for each of the capitals. If you've missed that weekend auction market report, there's a QR code that you can get a copy of the latest report in a PDF format. As usual, we'll finish off with our Infinity My Housing Market Suburb app, which is soon to be updated. Drum roll, excited for that. There's the QR code and the link for that. You have to get the password from our friends at Infinity. So no whinging, no complaining, and they'll be happy to do that. But we will be giving you some non-password protected investor apps soon. But we'll have the big brother or the big sister version of that, which will still be a password protected through Infinity. So this is a screenshot of what you get with our existing app, which is a Butte app. You can filter for, this is all the asking prices and asking rents on a daily basis, covers every suburb in Australia that has data. You can filter it for price or rent. You can filter it for the capital city regions or the outside capital city regions. There's a suburb, we're using Blacktown there. You can also filter it for house unit or townhouse. And we can also filter for the number of beds. So we've filtered that for 5 beds, not only the median price, but it gives you the low price and the high price. So it shows you the boundaries of the market as well as the midpoint of the market and the number of properties that are for sale, and ditto exactly the same for the rental market. So that's a great little thing to carry around with you to be able to investigate what's happening in the housing market in terms of your potential investment properties or your existing properties, or just for fun and games if you're trying to get to sleep at night. It's hours of entertainment, as you can see. So next week we have the latest September labour market data, August home loans, and the latest auction results. So it's been a really big show, Graeme. Our 100th show. I hope we've given people lots of information as usual, but also some real interest in terms of what the future holds and in terms of our product. And it'll only be improving and making it even more of a positive journey for those connected to real estate, property, or the housing market in Australia. And isn't that just about everybody, Graeme, if not everybody? So,
Well, you're either in it
so
or you're upset that you're not in it. That's the problem.
yeah, well, you got to live somewhere, mate. But yeah, great. Thank you very much for all your assistance, Graeme, through this journey. I really appreciated it, and it was great to have you back on deck today. It's always a lively show when you're around. So
Yeah.
we'll.
I do just want to thank you, Doc, on behalf of our
My
entire,
pleasure.
nearly 9,000 people just tuned in last week alone. So
Yeah,
clearly
it's
it's
good.
more popular when I'm not here, but I do want to thank you on behalf of the
No, no.
Infinity family and the industry as a whole, Doc. There's a lot of noise out there. There's a lot of information at hand that's free, but not all of it is accurate. Some of it pushes
Yeah,
an agenda, but this is
yeah,
our version of our community service with our knowledge that we give back.
yeah, yeah,
So
yeah,
a
yeah.
big thank you to you for the last couple of years, and
Yeah, my
look
pleasure,
forward to the
Graham.
next couple of hundred episodes together.
Absolutely, 100%.
Now,
Yeah,
Doc,
good one, mate.
before we finish today, how do you professionally, personally feel right now? Everything that's going on, I know how I feel. I'm
Yeah,
going to say it too. I feel that the housing market is fairly stable right now. I think
Yes,
there's some
well, it
good
is.
growth opportunity in a
Yes.
lot of areas nationwide. I think there's still good yields, there's good capital
Yeah.
growth. But how do you personally feel, professionally feel right now about the Australian housing market?
Well, it's interesting, Graham, because we've got the big three still roaring ahead. That's Brisbane, Perth, and Adelaide. Sydney's starting to peak, and Melbourne is just crying out to lift, right? It's the opportunist market. Now,
Mm,
so we're sort of coming to the cycle in Sydney. We will come to it in Perth, Adelaide, and Brisbane as
yep,
affordability barriers start to rise.
yep,
And that'll be maybe the next 6 months because you can't keep going to the banks if you're not earning more
no,
money to borrow more money to push up house prices. It's our model. It's why Australia's housing market works so well because we have this strict risk management policy from
yep.
our four banks. Right. Guess what's going to happen next year, Graham? Guess what's going to happen? More
Well,
than
if
likely, we're going to get an interest rate cut.
that means it'll
Here we go
create a
again.
little bit more
Here we
affordability,
go
which will put
again. Here we go again. Ripple in the pond, stone in the
so
pond, ripple.
so
So
really,
if
Doc, we all should have started saving a deposit for our home or our next investment when we're in the womb.
that's right. Yes. Yes. But can you see what I'm saying? We're just getting to the affordability peak, right? The catch
Yep.
up from the higher interest rates. We've just got to that point where things are even, where you can't borrow more because interest rates have been the same, right? You can't borrow more because incomes aren't growing at the same rate. Um, and the only reason Perth, Adelaide, and uh, Brisbane have been strong, one of the key reasons, is their incomes are lower and their house prices are higher than Sydney and Melbourne, and that means they have an affordability advantage, which they're taking
Mm.
advantage of now. That's why prices are growing. Of course, it's all part of confidence as well. Momentum grows as everyone's saying, "Oh, we better get a house in Perth because it'll be up another 50 grand before the end of the week." But they will get to the point where they can't keep bidding it up, as we said, and just in time for lower interest rates.
And then rates go down, we get a bit more affordability, values creep up a little bit again.
Well, those that have been marginalised because of high prices all of a sudden can afford to get back in the market, particularly when we've still got a very, very, very strong economy, mate. We've
Mhm.
still got 4.2% unemployment rate, which is as low as it was just about during the great mining boom during the noughties, right? It's a very low unemployment rate. And wages are growing at nearly the same rate as they were growing during that period as well. So it's inarguably, I know some people are doing it tough out there, and we can only look at the aggregated models, right, to give us a overall position and a picture of what's happening. So lower interest rates, if they come with a booming economy. We've got to watch what's happening with oil, though, Graham. That's the
Yeah.
key here. So fingers crossed that the shenanigans that are happening, and that's a mild word, it's worse than shenanigans, happening in the Middle East don't sort of evolve. But latest news today is that Israel have quite clearly said that they're not going to bomb, attack, whatever, the Iranian oil fields or nuclear facilities. So that's, phew, thank God for that. So that will act to continue to steady at least the price
Mm.
of oil. And that's been the big driver of inflation. So, we've still got some way to go. The Reserve Bank has set quarterly models of what they're going to look at. So that certainly would bring us, in my opinion, up till next year if they stick to what they say, because we're still way higher than our target. But if things keep evolving, I think, um, middle of next year at the latest, we'll get an interest rate cut, maybe, first few months, March or April of next year earlier. And as I said, that'll be, another pebble in the pond for the
Well,
housing
on that
market.
note, Doc, on that words of wisdom, hey, happy 100.
Whoopee!
Pleasure as always, mate. Thank you for the last couple of years.
My
I hope
pleasure. Oh,
everyone
it's
at
been great.
home's getting massive value. As to see 9,000 people a week listening to the podcast, let alone YouTube or anywhere. It's just astronomical. It's credit to the data, Doc. And it's credit to your wisdom. So thank you so much for coming on the journey.
My pleasure, Graham. It's a team effort, mate. Always.
Thanks, mate. Thank you. See you next week.
See you next week.